Hey, good day, everyone. Jeffrey Beemer here, Senior Investment Strategist over at ewotrader.com, and welcome to our show this week, which is Earnings Call. We do this each and every week, and if you are not familiar with us, what we do here is talk about stocks or companies that have earnings, and we talk about how to make money from those earnings, all right, and whether these stocks are going to move big or whether they're not going to move much at all. All right, so you're going to want to stick around with us. This is the week of August 4th, 2025. This is this is the biggest week of earnings as far as the number of companies declaring earnings. We have over 1,400 US-based companies that are declaring earnings this week. And believe it or not, we're only focused on 78 of those, and I'm going to highlight the best of those 78 right here on this show. So hang on, sit tight, relax, and let's get to it. All right, now each and every week we do highlight a bunch of stocks. So we do have a chapter feature at the bottom of this video if you want to jump to a particular stock name. We talk about these briefly, and we talk about it in the context of how to make money through the earnings event. Okay, this is not a buy and hold session. This is about trading options on stocks and how to profit from earnings. So here's our list for this week, and these are the best opportunities as far as the categories that follow. On the left-hand side, we have our breakout stocks. These are stocks that are anticipated to move double digits, okay, over 14%. And then on the right-hand side, we have the stocks that we call quiet stocks. All right, now what does a quiet stock look like? Well, we have Pfizer as an example. Okay, this is a quiet stock. Historically, it just doesn't move very much at all. And we use strategies such as Iron Condors through these cycles. Okay, so you can see I've highlighted with the ellipse all the earnings cycle. In fact, Pfizer has earnings tomorrow on Tuesday, August 5th. And we expect another quiet move. And in fact, I will update this chart next week with it. Now, the problem with Pfizer is that it's about a $23, $24 stock, and there's not really a lot of room within the options to create a great trade because we do sell premium, specifically a strategy called Iron Condors around these. Okay, but let's go through our list. Okay, and so when that pops back up, you'll see our quiet stocks for this week. What is a quiet stock? Well, just like Pfizer looks like, these are stocks that are anticipated to move less than 10%, and a lot of these less than even 5%. Okay, and this is not us. This is the historical movement of the stock and also what the option market makers are pricing in. So you see this week that we have Tyson Chicken declaring earnings today. We have Marriott, Caterpillar, McDonald's, Walt Disney, some big names declaring earnings this week. ConocoPhillips. Well, let's take a look at the chart and let's talk about these because we're going to start with Tyson Chicken because they declared earnings this morning before market open. And the average move here on Tyson is less than 7%. And take a look at this. You can see here in the blue banner above, the stock is only up 4.29% today. Okay, so while that is a good positive move for Tyson, and it looks like maybe the trend is going to reverse here. Okay, it did not even make its average move of 7%. Okay, this is what a quiet stock does. All right, you can see my scaling here is in $1 terms. So if I compress this, there's $2.50. If I do it down to $5, you can see that this is a really quiet stock and it just doesn't move very much. Okay, meaning it will barely move a few dollars even through a 1 month cycle. Okay, so Tyson Chicken already declared earnings, moved 4%. Its average is less than 7. That's right in. Option market makers got it right once again. Now, if we continue to move on, we have Marriott. Now, Marriott will declare Tuesday, tomorrow, before market open, and the average move here is less than 6%. Now, this is a good candidate for us because this is a $257 stock. And when you get stocks priced up in these over $100, especially, their option values are pretty juicy. Okay, meaning they're usually well over $1, sometimes $2, sometimes $3 in value, and you can make these nice and wide. So here we have Marriott, and we're not concerned that the stock has gone from roughly 280, 279 down to 257 in about a week. We're not worried about that. What we focus on is the earnings. For example, back here, you can see back in May, the day after earnings, okay, this stock just moved up a little bit, okay? And even the next day, it didn't gap higher until like 3 days after the move. All right, so this is kind of what we look at. We're not worried about the overall trend. We're just worried about the reaction through the earnings event, okay? Now, another stock that's going to declare on Tuesday, or excuse me, on Wednesday, actually, is going to be Caterpillar. All right. So, Caterpillar is going to declare Wednesday, and that is not April 30th. Let me just adjust that. That will be the 6th. So that will be 8/6. Okay. Before market open, and which is correct. And the expected move there is less than 6%. Now you can see that Caterpillar, man, what a run this stock has been on. So I would think that this might move, a good 4 to 5% through its earnings event. It could move a little higher, but last I checked, implied volatility, which usually gets really inflated, has not inflated very much. Okay, for Caterpillar. So we're anticipating relatively quiet move. And again, this is not our opinion. This is where the option market makers are pricing the options. They are anticipating a pretty quiet move on Caterpillar as they declare on Wednesday. Okay. So just watch out for that, because that is a bear weather. And I got that wrong. I just double checked because I knew that some of these stocks declare on the same day of the week every week. And this is actually Tuesday morning, and that will be the 5th. I just double checked as I went through here. And I usually double and triple check these before our show, but every now and then things move around. Okay, so there it is, Tuesday morning, August 5th, before market open. And again, this is less than a 6% move there. Okay, now going down through the rest of the week here. All right, we get into McDonald's. Now, McDonald's will declare on Wednesday. Okay, that will be August 6th, before market open. McDonald's has been on a little bit of a move here. Okay, coming up off the bottom of 285 recently. If I bring in more data here, you'll see the past earnings events, and you'll see that the stock doesn't really gap through the earnings events. I'm looking here at the May 1st declaration date, and you can see, if I zoom in on that a little bit, that the following days it's pretty quiet, normal trade for McDonald's. Okay, so we're expecting that again for McDonald's, a move of less than 4%. McDonald's is a $300 stock. Okay. So you should be able to go 5, 6, 7% out of the money pretty easily and still sell calls on top, puts on bottom, and then be sure to hedge with further out of the money, buying out of the money calls, buying out of the money puts to protect yourself. Okay. And you'll see why here as I show last week's trade, which you'll want to pay attention to when I get to that here in a little bit. But this is a good candidate for an Iron Condor as we go through earnings event this week for McDonald's. Now, Walt Disney moves a little bit more. Okay, it moves on an average around 8%. Now, Disney is one of those that is a little bit of a wild card. They went through a period where they were pretty consistent with single-digit earnings each and every week. And then things got a little political, and then they kind of made some incorrect corporate decisions, and things got a little bit volatile for Disney. So I'd be a little bit careful. If I can't get my Iron Condor about 10 to 12% out of the money, I would skip Disney. Okay, this is a $120 stock. I would go at least 10% out of the money to see where the options are trading. And I'd want to get, at least 50 cents for each contract that I sell. But I want to hedge that off and buy something further out of the money to protect myself. And you option traders know what that means. Okay. But again, Iron Condors are our preferred method here. And again, Disney, Wednesday before market open. Not crazy about all these before market opens. I like when they declare after market close, but we'll get to some of those here in just a little bit. So as we get later in the week, we just got two more quiet stocks to talk about. ConocoPhillips, that'll be Thursday, again, before market open. That is Thursday, August 7th. The estimated move here is less than 5%. Now, this is a $92 stock, okay? We should be able to get a nice Iron Condor out of this. And you can see here, last earnings cycle, the stock barely moved on the earnings date. Again, when these stocks declare before market open, that's the move right there. That itty bitty candle that you see right there was the move after earnings last time. The next day had a little volatility to it. Okay. And then stock moved a little bit higher, but then just, again, we're not concerned about the overall move. We're just concerned about 1 to 2 days after the earnings event. Where is that stock trading? Okay. And ConocoPhillips is just one of those big mature companies that just does not move very much. It takes a lot to move the needle on some of these well-diversified international type stocks. Okay. All right. So the last quiet stock that we're going to talk about this week is Sony. Now, Sony is only a $24 stock. This would be a little bit more difficult to trade. They have an average move of 8%. Now, Sony, again, might be, I would avoid Sony just because this is only a $25 stock. It's a little harder to trade Iron Condors here. Can it be done? Sure. Okay. But normally we like these pricier stocks that are above $50, closer to $100. To really trade this type of strategy. And Sony is, this is an ADR, so this is an international company, obviously. And, between tariffs and all things that are coming out regarding how that's going to impact companies, this might be a sit and wait to see how the stock reacts. Maybe it only moves 4%, but that's okay. We're kind of error. That would be an error on the side of caution. And that is not a problem at all when it comes to trading. Okay. All right. So that's our quiet list for this week. And now we get to the ones that are really exciting. Okay. So if you like this content, please like and subscribe, share it with others, because we talk about this stuff each and every week. And it's these volatile stocks. It's these breakout stocks that we like to call them, that are double-digit movers each and every week. And here we have a nice little list. Now, some of these stocks you're familiar with, some of the stocks you're not. Okay. And we're going to go through some of these, and some of these are make regular appearances on our show. Now, let me show you an example of a volatile stock. Okay. And this will be Akamai. Now, believe it or not, Akamai actually declares earnings this week. So I will be updating this chart as well this week. They declare on Thursday. Okay. And let me just see here if that is before market. No, that is after market close. Now, Akamai moves only about 12% on average, but it is a mover, as you can see on this chart. And this is why we like to trade it. Okay. It is a great mover. Now, I can tell you Akamai right now is the reading on the move is about 12%. Historically, this stock moves a lot more than that, as you can see with these big gaps around the earnings events. That's what makes trading these exciting. Okay. So let's get to our list this week. As I showed you already, let's get to the charts of these. All right. And you can see we're going to start with Palantir. Okay. And Palantir will declare aftermarket close today. All right. Now, Palantir is going to be, let's just say it's in one of those sectors that it gets our attention right now with AI and chips and technology. The average move here is greater than 19% on average. That is the average move. Okay. The estimated move coming in today is right there at that 19%. So we're looking for, possibly a 20% move in Palantir. Now, the problem is um, a lot of times the option market makers price this into the options. Now, what we do here is that we buy premium, even though it's expensive. We buy premium going into these earnings events, meaning we buy straddles or strangles, whichever one gives us better pricing. And then we see if the break evens of that trade are either better or worse than the average move of the stock. So if I can get a trade off that, for example, Palantir just this morning was trading at 12%, meaning it only needed to move 12% through earnings for a strangle to be profitable. And I sent that alert out to our subscribers that subscribe to a service that's called Delta Neutral Breakout, and we are looking for the stock to hit its average move. Okay, that's really the story, and we're just going by what the option market makers are pricing in and versus where the real prices are, and we're just making that and doing that analysis. Okay, now another good mover is TG Therapeutics. Now they had earnings this morning, and they dropped. Okay, their average move is 19%. They dropped 15%. So you can see that some of these don't, some stocks don't move their averages, or they move more than their averages. And that's the thing, is that it's not a perfect science with this. And the option market makers do get it wrong. I'm just double checking. Yeah, 17% now is where the stock is trading. So it did drop a little bit more from when I took this snapshot, but it has not moved its average move, but it still moved big double digits. Okay. Now I happen to know I priced TG Therapeutics on Friday, and it was looking for, doing a straddle or strangle would have required about a 20% move. That is beyond its average. Okay. And that just didn't, and here it only moved between 15 and 17%, and that trade would not be profitable at this point. Okay. Sometimes there is follow through in the direction, sometimes there's reversal. When there's follow through, that's great. We can make a profit eventually, as you'll see here in a few minutes on a trade that we have recently exited. So you'll want to stay tuned for that. But let's get through the rest of these breakout stocks. Lemonade. Okay, if you're not familiar with what Lemonade does, this is an insurance company. Okay, and believe it or not, it's a mover. Okay, they declare on Tuesday before market open, so tomorrow morning, and they have an average move of 18%. All right, this stock is historically a mover and pretty volatile. So we will see what happens with Lemonade and with the insurers as premiums continue to go up and coverage continues to decline. Okay, story of our lives, right? All right, so let's get into then another group, and this is probably the biggest mover that we have this week. Okay, this is Upstart Holdings. The symbol is UPST. They declare tomorrow, Tuesday, August 5th, after market close. Now, the average move here is greater than 35%. Yes, this stock is a mover. Okay. Now, it didn't look like there was a big move last time, and you're right. Okay. But, previous moves, okay, this move here is a big move. In fact, I can tell you what that move is because I kind of forgot there. That was a 31% move right there. So from this close to this next day after earnings event, that was a 31% move. Okay, on the previous. So this is historical mover, and its average over the past year and a half. Okay, of the data that I've collected here on Upstart is the average move is 35%. So a big mover there, the biggest mover that we have this week. Okay. Now, another big mover is Super Microcomputer. It's in a sector that gets a lot of attention. All right. So any big earnings beat or any positive outlook could mean the stock gap up and move higher. Any disappointment at all could really send this stock lower. I mean, and those are sometimes the big moves, okay, is when a company might beat estimates, might beat earnings estimates, might beat revenue estimates, but then its outlook is not so good, and boom, that stock will get cut big time. So that is the thing about some of these potentials, these companies that have big potential moves. Now, the average move here on Super Microcomputer is 17%. That's the average. Okay. So they will declare aftermarket close tomorrow. That's Tuesday, August 5th. And don't be surprised if this stock moves, 19, 20% pretty easy after its earnings call. We could see a big mover there. Now, another stock that has a good historic move is AppLovin. Okay, great name, fun name, AppLovin. APP is the symbol for AppLovin. They declare Wednesday, August 6th, after market close. The expected move here, or the average move here, and they kind of they're kind of matching up right now, is 25%. Okay. So if pricing changes and I could get this for maybe a 15% move through a straddle or strangle, where my break evens, any move above 15%, well, that would give me an edge, because the average move here on these stocks, on this particular stock, is greater than 25%. Okay. But if the market makers are pricing in that big move, 25%, then you don't have a trade, if that makes sense. Okay. Now, another stock that I've always liked trading is e.l.f. Beauty. Okay. This is one that the ladies at least are very familiar with. Okay. But as far as trading goes, it's also very popular as far as our group is concerned. We have traded this for some time now. They declare on Wednesday, August 6th, after market close. e.l.f. Beauty, e.l.f. is the symbol here. They have an average move of 24%. Okay. Now, the stock, as you can see, last earnings, look at this big move here. This is what we typically expect, these big positive explosions. A big wick on the top, meaning this stock opened up, traded much higher, gave us plenty of time to exit our trade at a profit. And again, we're trading straddles and strangles here. And then the stock kind of sold off in the afternoon, but still then had another run up. Look at that. Okay. In the days following. But we're expecting kind of the same thing here with e.l.f. And a move of well over 20%. So again, it's all about pricing as we head into that trade. But again, it's Wednesday after market close for e.l.f. Now we get into the latter part of the week. We're going to look at Pinterest here, believe it or not. This is a $38 stock. So the options here are going to be relatively inexpensive. Okay. If we can get a trade-off for about 10% of the stock price, that would be great. This stock has an average move of 16% through earnings. Okay. So on Pinterest, I would look for option pricings to be between $1.50 and $2, right around the money, meaning the 38s or the 37s or the 36 if there's dollar strikes. Where's the pricing there? I'm looking for relatively inexpensive to where it's about the same price. They're never identical, or rarely are they identical for the call and the put, identical in price. I would just look for for them to be similar in price. And if I can get this for, $3 or maybe $4 at most, then that would be a great trade, because this stock typically moves on average 16%. And a $3 or $4 price point would be about a 10% move. Okay. And that's what we're kind of looking for there. Now, another company, this one is interesting. This is the Trade Desk, TTD. Okay. TTD, the Trade Desk. And believe it or not, they have nothing to do with trading. This is a marketing company. This is a digital marketing company, advertising through every type of media, mobile, TV, and cable, etc. They do it all, and they are historical volatile stock. They move on average about 19%. You can see, yes, this is the last earnings announcement right there. That gap, and I was just going to grab my deal right there. Okay, this is the last earnings right there. That, look at that big move there. Stock went from roughly $60, closed the next day at 71. $11 move. In fact, you can see that big wick there on that candle, and so it was a little higher. But the very next day, it moved up and closed at 70, almost $80. Okay, so a stock going from 60 to 80 in 2 days, $20 move. That is a mover right there. Okay. And it's all because of earnings. And the stock has been a little bit volatile here. And so we would expect the same. So it's all about pricing on that straddle or strangle. Don't forget that. You need to get it below the average move. Where are your break evens? How far from the current price are those break evens? Are they 11%? Are they 12% away? Or are they 21, 22% away? Where's the average of the stock trading? Okay. I do all that research for my subscribers, by the way, each and every week. Okay. And we're going to close out our list this week with Twilio. Okay. They do have earnings on Thursday after market close. That's Thursday, August 7th. And the average move here is 14%. This is a $100 stock. So this is going to be on the a little bit more of expensive side. And so you will need a bigger account. This could be upwards of $1,000, $1,500, maybe even $2,000 for the straddle or strangle. So you do need a bigger account to trade a stock like this. Whereas on Pinterest at a $38 stock, you can probably trade that with as low as $10,000 in your trading account. This might require something around 40 or 50,000 in your trading account to trade, but that's all where how much the trade costs you. And as a good principle, we never risk more than 5% of portfolio on any single trade. And you're going to see why here as we move on. So stick around. I got a new trade for you, and I got a review of a trade that we just closed out, including last week's trade. You're going to want to hang on for just a second. Okay. So let's review our list for this week. We'll throw that back up. And you can see that really the biggest names here this week are McDonald's, Disney, Marriott, ConocoPhillips. Those are really the big names. They're not necessarily but what's interesting, those names are all on the quiet list. Okay. It's over on the left-hand side. Those are the big movers. And obviously we trade different strategies between those two sides. Okay. All right, so let's get into what we recently closed out. Okay, so we had an opening. We had a trade that we kept open. It was showing a little bit of a loss last week, and that was on Enphase Energy. Now, we closed out of this Friday. If you are still in it for some reason, today you can still close out of it at a profit, last I checked. Okay, but on Friday, it was a nice down day, and I was not really wanting to hold on to this through the weekend, so we closed it out at a 43% profit. So just by holding on for another full trading week, we went from a small loss, okay, into a nice profit, 43%, a profit of over $200, and that was in 11 days. Okay, we were in that trade for just 11 days and made a 43% return on our risk. Okay, and just by being a little patient. You can see the stock through the earnings event, stock gap down. That took us near our break even of our trade, but then we just needed the following days for that stock to just sell off and continue to move down, which it did, and we were able to profit on our trade. All right, so nice profitable trade there, and that trade is closed out. Okay, now the stock that I wanted to spend a moment on is Reddit. Okay, that was our trade from last week. Reddit was pricing in. We got a pricing where our break evens in our trade were about 20% out of the money. I was a little concerned with that, but on average, that should have been fine. Here's the thing: that we talked about this on Monday. Okay, you can see that right before earnings, this stock gapped higher. That's what really probably took this trade away from us. And then after earnings, the stock was up 17%. Now, if that had happened without that previous gap, again, our break evens were about 20% out of the money. We would have been fine. But what happened here is this stock broke up through our call spread. So remember, we trade Iron Condors on these. We have a call spread on top, a put spread on the bottom. We combine those two credits together, and that gives us our Iron Condor. So the puts, we don't need to worry about. Okay. We let them expire. We keep the entire premium that we receive for those. It's the calls that cause the problem. Okay. So this trade went through not only our short call on the top, but went through our long call on the top. Okay. So both our short option and our long option were in the money as we went through the last day of expiration, which was Friday. Okay. And as a result, the best thing to do in that situation is to let the trade just expire and not to try to trade out of it. What will happen is you will be assigned on your short sales, on your short option, you will be assigned stock. Okay. And then on your long option, you will also, that will be assigned on that, or you can exercise your right to buy the stock, and that will close out the position. Okay. And what it will do is then make sure that you don't lose more than the maximum risk in the trade. Because if you try to trade out of it, the spreads widen. Okay. And that can cause a problem where we actually trade. If you try to trade out of it, your trade might be more than $5 to get out of it, when that's our max risk in the trade is $5 minus our credit. Okay. That's why the loss here was $374. Okay. We did a $5 wide spread. Okay. Our credit is what kept this risk manageable on a small account, say $10,000. That was a 3.7% loss on portfolio. That is very easy to recover from. Okay. Very easy to recover from. One or two trades, boom, we're back in the black and good to go. That's why we keep our risk well below 5% for these. So the risk here was 3.74% to portfolio, and this is why this trade got away from us overnight, and there's nothing we could do because of that gap. Okay, so that is the story on Reddit. All right. Now, good news is we did profit on the Enphase trade, and I got another opportunity here to keep that streak going. Okay. We don't like streaks like this. We don't want to have a streak like this. And we've been very fortunate on this show to have pretty darn good track record. Okay. Trading earnings, and there's a reason why. Okay. Because this, our methodology is tried and true. So let's get to our trade for this week, and we'll close out our show. All right, our trade for this week is going to be on Lemonade. Okay, part of the reason is I like Lemonade again is it's a relatively inexpensive trade. All right, and even smaller accounts can trade it. The debit here is going to be a little over $500, so you could trade it with a $10,000 trading account, but I would be pretty quick on the trigger to make sure I get out without taking it all the way to expiration. That is where your max risk is. Okay, so we're expecting a double-digit move here, and if this stock does move double digits, then we should be fine. If it moves its average move on tomorrow after earnings, we should be fine. Again, this is pricing in about a 12% move, and yet the average move is 18%. If we get that 18 to 20% move, this will be nicely profitable, and that's what we're expecting, and that's why we're trading it. Okay, so this is a straddle. Okay, you buy two at the money options. You buy the call and you buy the put, and those are pricing in right at $5 right now. Okay, maybe just a little bit more. And again, we're expecting a move of over 18% because that is the average. Okay. So if it moves 16% and not 18%, great. We're still profitable. What happens if it only moves 10%? Well, we're building a little time into the trade. So we'll hang on to it to see if we get any follow through, just like we did with Enphase that I showed earlier today. Okay, so that's how to trade these. We get that expected move, we're out of this tomorrow. Okay, because earnings are tomorrow morning. But if not, then we'll hold on to it for a day or two and just see if we can recoup any of that loss that we will incur, because it didn't move the estimated move. So I hope all that made sense. But that is what it's all about, trading options. So that is our show for today. Big week, over 1,400 stocks, and some of them are potential market movers. So we're going to be kind of keeping our eye on markets. Markets are up big today, up over 1% across the board. And everything is reversing off of Friday's drop, and the buyers are back in it. So keep your eye on the charts, and everyone have a great trading week, and I will see you right back here next Monday. Take care.